There are those that suggest that the UK would gain, or the City of London would gain advantage post-Brexit if we were to do away with significant swathes of financial regulation that currently exist. Are those that make that argument missing the point that global regulation is increasingly where we should look, that globally regulation is becoming more aligned, not less?
Oh, absolutely. I mean, there's no question that in the period since the crisis, financial crisis of just over a decade ago, what has really happened is a global initiative to build stronger regulatory foundations, both in the prudential world and the conduct world. So there's no question that Brexit is not going to impact on that increasingly global approach, which of course is right because wholesale financial markets are global.
Financial regulation is becoming an ever-increasing part of every financial centre's makeup and constitution, and those that oversee it need to have their finger on the pulse of what is happening with the regulatory environment. Is it a prerequisite for whoever wants to be the next governor of the Bank of England that they should have significant regulatory experience?
Well, I've spent years delicately steering around those sorts of questions. But let me say this. I mean, what's changed, of course, and again in the post-crisis period, is that the Bank of England has been given important, very important regulatory responsibilities. The Bank of England I joined in the 1980s had regulatory responsibilities, and we went through a long wave of not having them. And it is appropriate that the central bank should have those responsibilities. And I'm a strong supporter of that. I'm still involved in the bank's work in that area as a member of two of the committees.
Mr. Bailey, what do you want a post-Brexit relationship with the EU in terms of financial services to look like?
Well, I think for financial services, the most important part of the Brexit process, assuming it goes this way, will be the next phase to come, which is about the future relationship. That's the key part for financial services. Now, I think you can see from what's already been agreed in this sort of outline agreement between the UK and the EU that there is an agreement to sort of base it on equivalence. What I would say, and I've made some remarks today which seek to flesh this out, is that that equivalence arrangement has to have, some substance around it. It can't be just two parties coming together and saying, well, what do we think today? It has to have predictability. Both financial markets and frankly us as regulators as well, we need to operate in a framework that gives us predictability, that we can operate within, that we can take and implement decisions, and can do that without disrupting markets and their very important public interest objectives. So that's what we need to argue for, in my view.
So you're embarking on a year of discussion, of dialogue, of exploring all of those issues. Where is the end point? Where do you anticipate that there will be a set of British regulations that will accomplish the goals you just laid out?
Well, let me say two things on that. First of all of this approach, it seems to me, should start with an important underlying principle that we support open financial markets and that we support open global financial markets. I'd say that quite clearly. This is not about regional financial markets, it's about global financial markets. So that should be a very clear end point for this process. The second point I'd make is that I think the agreements that we have with other countries should be based on outcomes. Those outcomes need to be founded on clear principles, and we use rules to, in a sense, put those into practice. But it's outcomes that matter. And we should be judged by the outcomes, and we should judge others by their outcomes, and we should found equivalence on that approach.